What's up, guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty, and this is going to be another mortgage rate update. Now, we have to keep doing this even though I am sick as shit. Content creating gets traffic to your site, and you have to do this on a daily basis or else nobody's going to watch it, or else that's what they tell me. Nobody's watching this shit anyway, but we're going to keep on keeping on. But we're going to have some good news here. Rates did go down. Number two, your total income, your raise next year staying at your employer is probably going to increase. I'll tell you how much that is going to be. And then you're probably going to start getting a lot of phone calls about something very specific when it comes to your home, because a little over half of all homes in the United States right now are something that's called equity rich. And we'll explain exactly what that is here in a little bit. Let's get on with the mortgage rate update. Sorry, excuse me. As of 8/8/2022, we are sitting at a 30-year fix will be 4.52%. 15-year fix will be sitting at 3.65%. 30-year high balance will be sitting at 4.62%, which is no change. Debt service covered ratio alone, which is going to be at 8.25%. This is a mortgage product that's going to just calculate your total income that you have coming in from your rental income versus the total debt that's coming out. Then we have to make sure the ratio is good on that side. FHA 30-year fix will be sitting at 3.86%. Jesus Christ, what is going on? 7/6 adjustable rate mortgage will be sitting at 4.80%. USDA 30-year fix will be sitting at 4.03%, no change from previous market day. VA 30-year fix will be sitting at 3.89%, and hard money fix and flip will be sitting at 9.35%. Now, majority of these loan products that we price out, this is based off of, aside from the high balance one, it's 820 credit score, $500,000 loan, $400,000 loan, 20% down payment, you know, all that other good stuff. The only thing on the high balance is we are doing $1 million appraised value sale price versus $800,000 home. All parameters other than that stays relatively the same, just so you know. But the good news is coming up here shortly, you're probably going to be getting a raise. Now, inflation, everybody knows that inflation is a bitch, but there's this weird thing that's happening right now. Of course, inflation is going up, but jobs are increasing, and are they actually hiring? That's one thing that they're not doing. The jobs are increasing, and I don't know where the hell these jobs are coming from or what jobs they are. Actually, it's mostly just, you know, servicing jobs and stuff like that, because that took the biggest hit, especially when COVID hit. Everybody, you know, they had to, Carnival cruise ships, hotels, you know, a lot of restaurants, they had to close up shop. They had to lay a lot of people off. And then on the other side, those people, they want to retain them as much as they can. So majority of them, they're probably going to be seeing somewhere between 8 to 12% increase in their pay. And you should probably get a little bit more, because it's incentivizing for you to stay, because you don't need to. Now the majority of companies realize that the workers, if they don't have workers, they don't have a company. And if they don't have a company, then they're kind of screwed. So they kind of lower their total, you know, profits their profit margin as a whole. And then they're going to go ahead and give it back to you. And rightly so, you have to, because at inflation rate at 9.1%, and especially because we do have 3 more interest rate hikes coming up. The next one is probably going to be in September. They're kind of doing this thing where the Fed's, Jerome Powell, he's kind of doing this thing where he's just kind of testing the market out. He's trying to see how, you know, little incremental changes to see how it's actually going to work. Majority of people are like, oh my God, 75 basis points he increased. But did he really? First time ever in history we were at 0% inflation, or the Fed was charging 0%. Now that just means from one bank to another bank, that's how much they were charging. So nobody was making any money. So, but you will probably be getting a raise coming up here soon. And then you're going to get to caddy back into the mortgaging world. The good thing is all this inflation and all of this crazy housing market and all of this, well, majority of you, because of big down payments that the people put, and the fact that majority of home values have increased so much, they are dwindling though. So this number could drastically change in the foreseen future. This could go from where it's at now to like nothing. It's happened before. Let's not forget 2008. We can never ever forget. Now, if interest rates do go up and increase, or the job market does take a tank on it, or the GDP, which is your gross domestic product, if companies don't start producing their numbers correctly and they're not doing what they're supposed to do, we're probably going to be shit out of luck. But the Majority of homes right now are what's called equity rich. 50%. This is the first time in history where majority of homes in the United States as a whole, especially here in California, they are over 50% loan to value. So that means that you, like for instance, if your house is $1 million, it's worth $1 million right now, you probably owe $500,000 on its home. Now, for case in point, my house, we bought this we started on this 2 years ago. We're about 50% loan to value right now because of how cheap we bought it at the bottom versus how much it's worth now. It is insane, especially the area that I live in, how much that it's increased. Now that is the reason why majority of these homes are called equity rich. Now, whenever you have something that's called equity rich or a home that is equity rich, what you'll end up getting is a lot of mortgaging companies are going to have to find out, hey, how are we going to be able to go ahead and tap into this equity? Because that in essence is what a mortgage is. A mortgage is a way for, you know, a person, a bank to go ahead and sell you, buy and sell money. That's it. Nothing more, nothing less. And by a byproduct of that, you get a house. Nothing more, because building a house is relatively cheap. It doesn't take that much. It's just labor that's the most expensive things. But the total amount of cost to build a house is, you'd be shocked how little it is as far as the actual product, like the wood and the appliances and cabinets and all of this stuff. If you built a house from ground up, let's say 2,500 to 3,000 square feet, the amount that it would cost you to build a house with no labor included would probably be about $100,000 to $125,000. So it's not that much. The labor, of course, would add another $100,000 on top of that. But you could easily build a house for like $250,000 if you had a land. So majority of mortgaging companies, banks are going to go ahead and try to give you a call. They're going to try to go ahead and see how they could go ahead and sell you more mortgages based off of the equity that you have. Now we're going to have to start getting a little creative. Home equity line of credits are probably going to start coming back after we see the next two rate hikes, because those are on a 10-year adjustable rate mortgage. And after your 10-year drop period, you will go to an adjustable rate mortgage on majority of them, not all of them, but majority of them. So that's your mortgage rate update. So up to 50% commission rebate, 0% listing on selling your current home or any mortgaging assistance. Link in the description below. Like, subscribe, comment, all that other stuff. I apologize about this video. I am sick as shit. Yeah, until next video, guys. I really appreciate you watching. Peace.